Good morning, traders. Welcome to BCR's morning market update. The markets are reacting weaker to US economic data, falling crude oil prices, strong gold momentum, and the Australian dollars continued rebound. Let's dive right into the fundamentals and technicals driving today's session. The US dollar extended its losing streak as rising layoffs and mixed jobless claims weighed on the greenback. Market sentiment shifted after the European Central Bank cut rates, with the president emphasizing economic uncertainty. Investors are now focused on Friday's non-farm payrolls NFP report, while recession risks in the US climbed to 42%. Technically, the US dollar index is trading just above the 104 mark near the 350-day SMA at 104.59. Short-term moving averages are trending lower, signaling bearish pressure. If 104 breaks, further downside targets include 103.34 and 103. A rebound above 104.59 could see a move towards 105.17. Next up, let's have a look at crude oil, which fell for the fifth consecutive day, trading below $66 as US crude inventories surged and concerns over OPEC's production increases in April added pressure. Oil found some support after reports that Trump may ease tariffs on Canadian energy imports. Technically, WTI remains in a downtrend, having fallen over 15% since January's high of 79.37. MACD indicators remain bearish with no signals of reversal. If crude breaks below 65.8, it could test the 64.75 level, which was the low of the 10th of September. Resistance levels are seen at 67.67, which is the 5-day SMA, and 68.28, which is Tuesday's high. A recovery above $70 would be needed to shift the current bearish momentum. Next, let's have a look at gold, which is held above $2,900 as US trade tensions and economic uncertainty fueled safe haven demand. Concerns over Trump's reciprocal tariffs taking effect in April continue to support the precious metals. Despite a slight pullback, gold remains on track for further gains. Technically, gold remains bullish with RSI at 58.9, signaling continued upside momentum. Key resistance levels include 29.36, which is February the 18th high, and the 29.56 mark, which is the all-time high, with a break above targeting $3,000. On the downside, a close below 2,900 could lead to a correction towards 28.73, which is the 30-day SMA, and 28.57, which is the 34-day SMA. Next up, let's have a look at the Australian dollar, which extended gains to 63.65, supported by US dollar weakness and Australia's rising trade surplus. A 1.3% jump in exports helped the Aussie, but ongoing US-China trade tensions remain a risk factor. On the technical front, the Australian dollar is trading with a bullish ascending channel with RSI above 50, indicating positive momentum. Resistance sits at 63.70, which is the 100-day SMA, and 64.09. Immediate support is at 63 cents, followed by 62.70, which is the 5-day SMA, and a break below 62 cents could trigger further losses. Well, that wraps up today's morning market analysis. Keep an eye on US jobs data, oil price movements, gold's resilience, and the Australian dollar's strength as the session unfolds. Stay sharp, manage your risk, and I'll see you in the markets. Happy trading.